Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are talking support and resistance. And these are two of my favorite things. I say, cue Julie Andrews skipping through, the meadows. With respect to technical analysis, support, resistance, and trends, these are things that we talk about every single day. And so today we're going to spend the entire webcast talking about them, how to spot support and resistance in uptrends, in downtrends, and in sideways trends. We're going to play some example trades. My name is Barbara Armstrong. I'm a coach with Schwab. I'm delighted that so many of you are joining us here today. And I want to thank those of you who help bring this class to life by being so participatory in the chat. And I saw like 20 minutes or so before the class even began, Rob Indy was in there, looking to get a front row seat, followed by Howard and the Wire Rabbit and Janelle and Jim and the rest of the gang. So thank you all for being here. I appreciate it. We also have Connie Hill with us in the chat, and she's a friend and a fellow coach. She understands all of what we're going to talk about today and then some. So if you've got any questions, this is an introductory level class. We call it Getting Started with Technical Analysis for a reason. So if you've got questions, don't think that you're the only one. Probably a dozen people or more have that question. And then, we have thousands that watch this in the archives, so they'd love the answer for it too. Okay. I'm just, reading the comments as we go here. So we've got people here, really from all over the country. If you aren't following Connie and I on X, we're both posting on a regular basis, on a daily basis, charts, interesting information. I usually post something motivational to start out the day at Barb Armstrong CS and at Connie Hill CS. So it's another free resource that you can take advantage of. Know that we are going to look at a whole pile of charts today, but everything we look at is for illustrative purposes only. It's not intended to be looked at as a recommendation on the part of Schwab or myself, or, as a reflection of the results you can expect to achieve. Just because something has moved one way in the past doesn't guarantee it's going to move that way in the future. And while this class, obviously discusses technical analysis, it doesn't mean that other approaches, including fundamental analysis, we're now, heading into the earnings season. So, and what's going on, within our country politically and globally is important as well. Our examples today that we'll look at and our example trades will be on the Paper Money software application on the Thinkorswim desktop platform. Okay, when we use stop loss orders, which we do on a regular basis, know that if we use a stop limit order, we could miss getting out altogether. And with a stop market order, it doesn't guarantee that we're going to get out at the price that we requested. So I've designed this to be taught in a 9+ week rotation. We're now on week 3. And the reason I added a plus to that is usually at the end of this rotation, I'll add in a bonus week. So the last time the bonus was the 7 or 8 things I wish I'd known about trading when I got started. The time before that, we talked about Fibonacci's. So who knows what it'll be this time around. But we're back at the beginning of the rotation, and today we're talking support and resistance. Next week will be candlesticks. So we got to love those candlesticks too. So today we're going to go over some of the basics. We're going to identify ways to identify support and resistance, discuss how trend lines fit into all of that, and then look at a bunch of charts, and we're going to place an example trade. Now, if you're watching this live, there was some conversation around live events. And so if you have never been to a live event or you're new to all of this and you're saying, hey, I just stumbled upon this class and it's the first one I've ever attended, where do I get more information? Well, if you come to schwab.com, let me just make this fit the screen, schwab.com/coaching, and I'll put this, as a link in the show notes below if you're watching this in the archives, and it's also in the chat. But if you come to live webcasts, you can see, if we scroll down here, here's the month of October. And here is today. So we're now on getting started with technical analysis. Next up will be swing trading with Connie. And then I'm going to take after the close today. I'm excited about that. So, you're going to want to come and check that out. We're going to talk about an income generating strategy. So, be there, be square. I'm filling in for Kevin Horner. And I filled in for Kevin for 3 of the last 4 weeks, I think. So we also have some income generating opportunities that we placed in previous classes that we might follow up on as well. And it's important to understand when we place trades, not only, when to get in, but when a trader might look at getting out as well. So this is where you can see the entire schedule. And if you say, well, I really love Connie Hill, and I know that the schedule has changed effective the beginning of October. When is she teaching and what is she teaching? So you can see today Connie's teaching swing trading, tomorrow trading index options. She's filling in for Ben, and Thursday selecting an option strategy, and a new class for all of us that Connie's teaching is straddles and strangles on Mondays. So there's the schedule. So you can look at it by coach, you can look at it by skill level. If you say like, hey, I don't care who's teaching it, but I'm a beginner. So show me the beginner classes. Well, here you go. Okay. Okay, so that's one thing. The second thing, people were saying, oh, I'll see you in Miami, or I don't know if I'm going to make Houston, but I'm going to come to Dallas. And if you're new, you're going, I don't even know what these people are talking about. Are they all friends? And you know what? Like, I have made friends by attending some of these live events back when I was a client. I started as a client, a student of this education back in 2011. So the next event that we're hosting will be in Anaheim the weekend before Thanksgiving. It's that Saturday. It is free to attend. We'll have the coffee on. We'll provide breakfast, lunch, and a great reception at the end of the day. So we will feed your, body as well as your mind. And then we've got a 2-day event in Houston, mid-December. And then the weekend before Christmas, come join us. We'll be doing an advanced options 2-day workshop the weekend before Christmas. And then we're back. You can see where we're going in January. The whole first quarter schedule is up. We'll be in Atlanta. We'll be in Washington. We'll be in Denver. We're starting out in Dallas. So yeah, you have to register, but there is no cost to do so. So if you're thinking, hey, I live in the Seattle area, I think I might like to go to that, sign up sooner rather than later, because these do fill up quickly, my friends. So, and I'd hate for you to get shut out. Okay. Okay. There we go. Okay. So let's get back to our regular programming. So we want to talk about support first. So with support, what is support? It's an area where buyers step in after sellers have been in charge. Now, how long have the sellers been large and in charge? Well, it just depends. It may have been for days. It may have been, for weeks. It may have been for hours. But what we're looking for, I've been posting stuff on X. Can you tell? So, the price has been driven down. Let me just get my drawing tool going here. And then it gets to a point similar to where it's been before. And the buyers say, hey, you know what? I think this has fallen far enough. And they start buying and they take the price back up. And then the sellers say, hey, you know what? I was waiting for this to go up a little, and then they take it back down. And when it gets down to this similar support level, the buyers come back in again. And this isn't a finite number, and I want to be clear about that. It's not like this number is $30.20. It might be between 29 and 31, but every time it comes back down here, and you see here, it didn't come right down as far as it did the previous times, but it came back into the hood, into that neighborhood, right? Right. Yeah. Okay. So, and support is where it seems to come down and be a floor of sorts, where if it gets down this far, the buyers come in and say, yeah, we don't want to take it any lower than this. And the more times the support, it hits support and holds, the stronger it is. And I've made this point several times. Like, my father-in-law was a huge fan of medieval history. And so I kind of had this picture in my head of knights guarding a castle or a drawbridge. And every time it came down and hit this, another knight got added to the line and just kept making it stronger and stronger and stronger. So that even though, the villains went away for some time, when they came back, that strength was still there. So the more times it hits support, the stronger it is seen as being. And this holds for both support and resistance. So I see support as being the floor, resistance as being a ceiling. And we'll talk about resistance next. Not to get ahead of myself. So here's resistance. And what pattern, for those of you who are a little more experienced, what pattern do we see? Well, when we look at this, one, we're seeing, those knights, right? Only now, what are they supporting? So now the knights are sitting at the ceiling and saying, hey, you're not coming up these stairs any further. And every time you kind of come into this area, we're going to knock you down. And again, like, you see this kind of gray area, it's indicating that this is a range, not a finite number. Yeah, a Head and Shoulders. Actually, they call it an inverted Head and Shoulders. But we see this pattern. We've seen this pattern so much more on the this side, that I think we almost forget that it's inverted. Kind of looks ghostly. It's a kind of a seasonally appropriate time. But, we have a similar resistance level, right? And then it came down, came way down, didn't come quite as far down the second time. So there's our head and our two shoulders. And this is a good illustration of resistance. It comes up so far, and then the sellers say, you know what? I'm going to take my money. Especially after it fell all the way down here, they say, if it can just go back up here, I'm out. And so what happens is it gets back up here, and then the sellers come in again. And then the buyers are going, you know what? I believe in this company or what it sells or whatever. And they start buying. So, and like support, it's a general area, not a specific price. And the same as, we just talked about on the support side with resistance, the more times it hits that resistance level, the stronger it is seen as being. Here's another concept, and it blows my mind how often I see this on the charts, and I never tire of it. I think that this whole world of technical analysis is fascinating, and how support and resistance, one can become the other. And I kind of think of it almost like a high-rise building where, here's your ceiling, and here's your floor. And then that floor becomes the new ceiling. So, behave like a floor and a ceiling in a multi-story building. So the ceiling on one level becomes the floor on the next. And, so old resistance can become new support, and old support can become new resistance. So this one is bullish, and this one is bearish, because it's saying, hey, this used to be the floor, now it's the ceiling. Yeah. So somebody's saying every time Barb mentions knights holding the line, I think of, Monty Python and the armless, legless knight saying none shall pass. It's just a flesh wound. Okay. Yeah, that is funny. Would you just take him? He'll be dead by Friday. Okay. So trend lines. And how, when I said these kind of all go together, right? Because a trend line, how do we create a trend line? Well, a trend line is the result of it's linking a bunch of similar lows, right? Or it could be a matter of linking, in a bearish case, a number of similar highs. So you're connecting the lows, when you're bullish typically, or connecting the highs when you're bearish. And they say, when we look at support and resistance, we're looking for 2 points of contact. However, with a trend line, we're looking for more than that. We're looking for at least 3. And we're going to look at a bunch of examples, and we can talk that through, because to me, like, all this concept is great, but it really comes to life when we start seeing it on the charts, right? Right. So, and then, how channels, again, this is kind of something that I'll draw this support line, and then I'll think, oh, and look at it, seems to be a similar ceiling that it's hitting. And that can be interesting. How? Well, when we draw a channel that gives us, where things, and sometimes, like, these swings are not trivial, right? Oh, sorry, I just switched. Didn't want to go to, because we're going to place a trade, based on a channel today. So I wanted to take a minute on this. So when we look at these channels, and we've got areas of support and areas of resistance. So here's our support levels. And then we come up here and we say, well, and here's the ceiling. So once this has happened, could we then, when it comes back again, say, you know what? I'm going to buy shares of stock here. Let's say this is at 50, and maybe this is at 70. Maybe this range that it keeps going in is about 20 bucks wide. And so could you say, well, I'm going to buy here, and if it gets up here, I'm going to sell. And then when it comes back down here, maybe now it's at 70. Well, maybe it's not 70, maybe it's at 60. And then I'm going to sell it when it gets up to 80. So just because something's trading in a channel doesn't mean it's not tradable. We can trade if we're looking to do a shorter term income generating strategy. Maybe, this helps us establish targets. And then, of course, if we see it break through, we want to be prepared for this. And this is why we might use a stop loss order. Okay. So, this could say, hey, the trend is our friend until it ends, right? How do we tell when it ends? Well, when it breaks below this support level, this uptrending channel appears to be now no more. So there's no guarantee, and trust me, I've seen that happen. So if it either breaks support or breaks resistance, now if it breaks resistance, what might happen? So if instead of it breaking to the downside, if it breaks out to the upside, it might move $20. So if this is 80, it might move a similar amount to the upside and then come back and retest. So this old resistance level could become the new support level, and we could start a whole new channel. That's a possibility too. But instead, in this particular case, it broke to the downside. And so how do we prepare for that? We have a stop in place so that if we buy the stock and it doesn't go up as we're expecting, then we get out with less of a loss than if we just held on and started using hope as a strategy. Hope isn't a strategy. It's a 4-letter word. So, and I say that often. because I want, you guys to really think about that. I posted something, a quote from Warren Buffett today on X, and I don't remember exactly the quote. Just a sec, I can. Until you can manage your emotions, don't expect to manage money. And or if you wanted to tweak that, you might say don't expect to manage money successfully or consistently. And so having a plan can help you overcome that. It helps you manage your emotions. So when we have a gap, might there be a pattern and a gap? Well, often, something might gap, and in this case it gapped up. It might run to the upside and then come back to close to where it started the gap from. Sometimes it might go up and then come all the way back to where it gapped from, like all the way back down to here. That's a possibility also. But gaps occur when orders flood the market before it opens, and it drives the price up so that as soon as the market opens, the price is up substantially above where it closed the previous day. And so gaps may indicate a new level of support and resistance. So in this case, we're seeing this gap created a new support level. And it came back and retested it here for about a week. And it was like banging, 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 banging on that floor. And the floor held. It went up, came all the way back down, hit it again for a couple of days. Okay. And the bigger the gap, the more it may be seen as being significant. And, that's a bit of a statement of the obvious on that one, right? Right. Okay. Okay, let's go out and look at the charts. And, I said that, these channels could be, important, but let's look at a couple of different things to start. So how about we look at DPZ? So this is Domino's Pizza. And here's one where, when we look at year to date, like this is a dog's breakfast, right? Like how can you make sense of this? Like this black line is the 100-day moving average, but it looked like it was moving up for a little bit. But at the same time, we were seeing kind of similar highs here. And then when we looked at our lows, so it was setting up a bit of a pennant pattern or a triangle pattern. And then when it broke, so let me extend this line, extend to the right. When it broke, it didn't break to the upside, it broke to the downside. And when we come in and we look, at what's been happening since the end of July, it's been downtrending. And these, the 30-day moving average, it's weaving back and forth between it. The 10-day moving average is moving back and forth between it. And it's really in, let me just get rid of these lines now, a bit of a downtrending channel. Now, if you were saying, well, it's in a downtrending channel, but this has been, it has been a very bullish market. Like if we come and we look at the S&P 500, it's just been kind of marching up the hill, nice and steady eddy. And what has been acting as support here? Well, I'd say this 30-day moving average. It comes down, kisses it, keeps on going, kisses it, hugs the line a bit, keeps on going, comes back, little smooch, keeps on going, smooch, smooch, keeps on going. Now it broke below it, so that was a bit of a, kiss and got thrown on the bed, and then it's back up on its feet. So yesterday, and this is where the candlestick pattern conversation next week will be very interesting. So we had this big down day, but yesterday was a bullish harami at a support level. And then today we've got a bullish engulfing, and this candle pattern doesn't require confirmation, but now we have another bullish configuration, which is a bullish harami, where today's candle a bullish engulfing, or today's candle is engulfing the pattern of the previous day. So going back to DPZ, if you said, okay, I have only one tool in my kit bag, and that tool is a stock. I understand, how to trade stocks. Don't hit me with any of that complicated, option stuff. I'm not there yet. And, I'd encourage you to check out the Getting Started with Options series, but you could say, well, this has been bouncing off this support level, and I know it's downtrending, but what if I bought it and then sold it when it just came up to this support level around this 444? So that's one way you could do that. But what this would be called is a counter trend trade, because the stock is downtrending and yet you're doing a bullish trade. But where your confidence is in it moving up. And obviously it had earnings today. It's up 4.7%. It beat on earnings and must have had a decent report for it to have such a positive result. But that is something that's in a downtrending channel. Now, if we look at Apple, so, and again, this is where I find it helpful to be drawn lines. So I might start, over here and just kind of draw my channel. And you want to hit as many lines as you can, and then, or as many candles as you can. And then I'm going to duplicate that and bring it down here. Say this seems to be in an uptrending channel. And right now, what is it doing? Well, it's bouncing off this 30-day moving average. And so some of you may want to draw the channel, and others might just say, well, I've got eyes. I'm looking at this and I see that this 30-day moving average has been holding as support. It came down, hit the 30-day moving average and bounced. Here it went under for, all of it. It closed under. The next day we had this bullish harami. Then we had a doji pattern, or an inverted hammer, which at a support level is considered bullish also, and then it continued to go up. But, so it came down to the 30-day, came down to the 30-day again. And so if we were doing a short-term trade, like let's say you wanted to make some extra money for Christmas, but you don't really want to withdraw money from your brokerage account, but you'd be okay with withdrawing money if you made it in the short term. So could you say, well, okay, I am going to extend this line to the right. I'm going to buy 100 shares here, and my intention is to sell it when it gets up here to this 274 level. And, you could do that. And it's a way of trying to pick a target and take advantage of something that you see trading within this channel framework over the last 3 months. Does that make sense? Now, where would we put our stop? And what's the advantage of putting on a trade when something's bouncing off a support level? Well, if you believe this support level is going to hold, so we look at this recent low was 244. This low here, 244.70. So let's take 244 as our low. And we say, okay, 244 times, let's say, if it goes 2% lower, we want to exit. So we're going to put our stop in at 239. 239.12 will be our stop. Was this 244? Yeah. So our stop is going to be at 239.12. And where's our target going to be? Well, let's say we make it this 270-ish, which might be a little bit light. So you might say, well, I want to make it this 274. Of course, if it gets close, like let's say it gets up here to 260, and it seems to have trouble going higher, I mean, you could certainly exit. But if we're basing it on the trend line, we're going to come to Apple, and we're pretending we have this $1 million account. Let's say we don't want to put more than 5% ish in any one stock. So we're going to buy 100 shares, and we're going to buy custom with an OCO bracket. And what we're going to say is, hey, we want to get out when it goes up to about 274. So 274. And so how much could we make? Well, if we take our 274, 274, and I subtract my 247.50, which is the price, current price, we could make about 26.50. So if we were looking for Christmas present money, or maybe you wanted some money to be able to travel, take a trip at Christmas or something like that, you could say, well, I could see this hitting this target within the next couple of months. And if it goes wrong, I don't want to waste a lot of time a hoping and a praying. My strategy is, if I'm wrong, to admit it quickly. So I'm going to put this stop in at 239.12. And so how much might I lose? Well, from 239 to 247, that's about $850 we could be down. Okay, and just think, well, I'm really good at this technical analysis stuff. That's not going to happen. It could happen. And this stop doesn't guarantee. If Apple were to gap down, we could be out for more than that. So it's saying, we're risking 838 for the opportunity to potentially make 26.50. Okay, and where did we put our target and our exit? Well, it was based on a support and resistance in a channel. Yeah. Yeah, Connie's saying it's never too early to start shopping for my Christmas presents. Yeah, I've already planned a whole Christmas thing. And here's the deal. It's not free. I'm flying to Bend to be with my daughter and her family, and we're going to go to Portland and stay in a hotel we got lots of stuff planned. And it all requires a little cheddar, my friends. And so, could you use your trading to fund potentially? Now, it could all go wrong, and you could say, well, I'm going to be home eating, craft dinner instead, and that's a possibility. But let's hope it goes swimmingly and you can afford, to buy some of the extra treats when you go away. And this, could be a part of that. Okay, let's look at Adobe. Oops. Got to watch my time here. Okay, so Adobe, what's this trading in? I drew the lines ahead, so we can already see, right? It's trading in a channel, right? And if we look at this, it's down 25% year to date. And so this is one of these, if we did a bullish trade on this, it's going sideways. But it's come down here. Let's get out. I did this on our slide, so I guess I might as well be consistent. It's come down once, twice, 3 times a lady. And you might say, well, I mean, it came down into this neighborhood, but yeah, and then it hung out here for a week and kept hitting it. And then it came down pretty abruptly. It was kind of one and done. And then it came down, it's kind of spent 2 days here. So yesterday was a hammer pattern at a support level, or you could have looked at it as a 2-candle pattern, which is a bullish harami. And then today it's kind of come down and it opened lower, but moving higher. And so could we say, well, hey, when it comes up into this neighborhood of this 365, 370-ish range. So might I expect it to come back up here? Now, we might expect it. It might not happen. You know, it might not happen, but it might. Like, what if it did? And what if we bought 100 shares and we put our target maybe not right at 370? Why don't we just give it a little more room, call it 365? Now, where might we put our stop? Well, we might say today the low was where? So all we have to do is hover over that candle and say, okay, today the low was 332.72. So we're going to take that 332.72. So we can come over here. Let's call it 333. 333 times 0.98 and say if it goes 2% below that, we're out. So 326.34. So that's going to be our stop. 326.34. And we're buying in at 338. So we're risking $1,200. Okay. So, you know, and that risk is what? It is real. This might not hold just because it looks like a significant support level. It might not hold. And what's our target going to be? We're going to make it 365. So just a little closer. Like here, what was our high that day? 370. Our high that day, 370. What were our high these days? 364.65. So we're going to go with 365. And if it gets to 365 and it looks like it's going to, you know, start heading back down, we can always say, hey, you know, we've done a bit of all right here. And so now, could we do this with 25 stocks? Sure. Could we do it with 30? We could do it with any number you want. We're just sticking with this because we have a large account and we're going to make our target 365. And what is this based on? It's based on support and resistance. And so this is how we can use support and resistance to help us determine potential entries and exits. And I think that's pretty slick. And so how much are we risking? I love that this confirmation page does the math. So it's saying, hey, you've got a target here that would have you making, you know, $2,693. Yay. Or you could lose 1,173. So we're hoping for more than double the upside to what our downside is. But if it gapped down, we could lose more. If it gapped up, you know, we could make more too. Yeah, so Jayton is asking, you know, how do I get that year-to-date, month-to-date on the chart? It's in my Twitter post that is pinned to the top of my feed. It's also in the show notes down below if you're watching this, if you watch this in the archives, or if you go to the archives afterwards, if for some reason you don't use X. So there we're going to put our stock with our target. And you can put a note in just from you to you, target and exit based on support and resistance. There we go. Bob's your uncle. Okay, so we've done 2 example trades. We did one on Apple and we did one on Adobe. But could we look at a stock like Accenture, which, you know, and this is another one where it's just looking at support and resistance. And this has been downtrending within this big kind of sweeping range for most of the year. I mean, this started in February. And it's weaving through the 10 and the 30-day, and it gets up to a resistance level and it kind of rolls and it comes down to this support type level. And, you know, and it bounces. How about Newmont Mines? Now, this is a gold mining stock. And this is, you know, a classic uptrend, isn't it? I'm just going to get rid of that ATR. Just a classic uptrend, just walking steadily up the hill. There's been a couple of occasions it's crossed that 30-day moving average, but kind of through this whole year, that 30-day moving average has been holding fairly well as a support level. And, it's continuing to move to the upside today. So if you wanted to add this stock to your portfolio, might you say, well, I am going to put a stop below that 30-day moving average because that has been holding as a support level. So there we go. And one last one, because we are now, officially out of time. Here's UNH. So it was on the struggle bus, but it's created, again, one of these inverted cup and handle, or, a cup and handle pattern, or an inverted head and shoulders. Old ceiling, old resistance has become new support, and now it's moving to the upside. And so if we were to, want to maybe add this to our portfolio, where might we put an exit? Maybe we choose to put it below this support level at 328. It's just a thought. Okay, so that's a wrap for today. We've talked about support. We've talked about resistance. And if you want more on this, this will be available in the archives. My ask for you is that you hit the like button if you found this valuable, because what that does is it moves it up in the algorithms on YouTube so more people can find this content. I'd appreciate it if you would follow Connie and I in the Land of X, Barb Armstrong CS, Connie Hill CS. There was no survey today, so you're off the hook on that. But if you've never attended a live event, I encourage you to check those out. It would be great to see you out there. And I think you'll be impressed. So guys, thank you very much for joining me. Lots of great content still to come. Up next is Connie, so we'll let her go and get ready. If you stick around, the class after next will be after the close, and I'll be back for that to wrap up the day. Okay, see you folks. Have a great day, and take care.